Hey guys, it's Sean at eMiniSchool. It's June 1st. Let's look at the Russell chart. So on the nightly emails, we've been taking the second session trade. Um, we have a trade setup called that, and today it was a pretty big winner. So we use a 7-minute chart for that. So basically, we would want to short the second set of reds right here. Okay, and then we have predefined targets. We actually have the targets before we get into the trade. So the stop would be right here based on that entry bar right here. So let's break down the 7-minute, look at the 3-minute chart. So the market opens, we gap down, we have blue bars, indicators high, means that this is most likely a substantial low. So in real time, if the bars are blue and it comes up, we don't want to short right here. Okay, so it's very high odds that this is going to be a substantial low. So from there we come up, we fill the gap, and then we make the move down. Blue bars come in again, okay, saying that this is a substantial low. We have a correction pattern off of the last prior move, and we go to red right here, and the targets are down here. So inside the 7-minute and the 10-minute, we get 3-minute green bars as it pulls up right here based off this prior down move. The 7-minute chart stays red even on this move up. So what we want to do is use the 7-minute or the 10-minute and only trade the 3-minute in that direction. Okay, so we're always trading the direction of the bigger pattern. So if the bigger pattern is down, we want to wait for the trade setup, and when the 7 or the 10-minute is red, when it pulls up, even though the 3-minute goes green, once it rolls back over, or the 3-minute has higher probabilities of rolling back over to the downside when the 7-minute or the 10-minute is red during this move up. So it just kind of tells you don't go long right there. Look for the market to stay weak. This is just a very minor bounce. Okay, the 60-minute chart we also use, and our outlook is this shoulder right here. Okay, this could be an inverse head and two shoulders right here. Okay, this move down, okay, is the waves are expanding and they're getting bigger. So tomorrow we're looking if this low is broken at the 635 level or 636 level. Um, Basically this line right here, we're looking for it to come down to 600. Okay, that's a 40-point move. I'm not saying that's going to happen all tomorrow, but if we break this low, we're looking for the 600. We actually have a 604 target, but 600 is most likely going to be hit if we start breaking down here. So you'll notice the 60-minute was red all day as well. So 60 minutes red, the pattern is down. Remember at this high, okay, even though this is the Russell, we had the 12, 16, 12, 15, 12, 16 area as a high target. So from there, we've really fell off. We do have one higher target, but that's going out pretty far. So since we're day trading and wanting to know the next day's outlook, that is it's a little bit too far out there since we fell so hard off that 1216 target. So basically, ES looks pretty much the same as the Russell. So since we hit that target, we fell pretty hard. So we're probably going to break here, at least probably test that 600. So I'd be careful going long intraday. Now tomorrow morning, we could come down and then pull up into this range before it really rolls back over. And we could be at 600 by the end of the week if we start making minor waves within this larger wave down. So, anyways, I wanted to show the second session trade. Um, it was basically good for on the ES, I think about 20 points, 87 to 67. So that's a good setup. And like we were saying, between this high and this low, the second session trade really is the best trade. Even though we did come lower than this low, we're still kind of using that method to keep us in the right direction.